Hi guys, welcome to another video. This is a video of how I used our smart money data to catch over 100 pips on Euro USD against a major economic data. I'll be breaking down the trade, the smart money data and the economic data. So sit back, relax and pay 100% attention if you are serious about becoming a profitable and professional trader. If you are new to the channel, welcome to Tom's Capital. Here we approach the financial market with trading facts and institutional data, which help us to see the market in the same perspective as an institutional trader. I publish daily institutional data on this channel just before London Open so that all Tom's Capital family members can access the data, use it in their day trading to achieve better results. If you would like to join the family, click the subscribe button right now and turn on the bell icon to get notified when we post. The smart money data that I share on this channel are institutional pending order, institutional price magnet, and our VIP buyers. If you don't know what these data are, you need to see our previous videos where I explained the data. I'll leave links to the video in the description of this video. To our new viewers, I promise you don't want to miss out on this as a trader. Without wasting any of our time, let's jump right into the analysis. The trade I'm about to break down was taken on Friday the 6th of January 2023. It was a buy trade, and here is a screenshot of the running trade which I shared on the community tab when I was about to hit my first take profit at about 100 pips. So how was I able to spot and take this trade? On the screen right now is the 1 hour chart of the Euro US dollar. The first thing to do is to find my bearing and location in the market as far as major swings are concerned. How I do that is by marking the major EBITDA prices above and below current market price. As the market opened on Wednesday of the week of that trade, the market opened here around 1.0550 minor EBITDA price. The next major EBITDA price below market price at that point is 1.0500. Let's go ahead and mark that on the chart. If you don't know what EBITDA prices are, you need to watch our video on EBITDA price. The link should be in the description of this video. Now that we have the lower major EBITDA level, we now mark the upper major EBITDA level, and that is 1.0850. Let's go ahead and mark that also. The major EBITDA prices are for swing reversal points and for swing continuation levels. As you can see that the price is close to the lower major EBITDA level, which means the market may reverse from that level. That was the first pointer at a bullish reversal for me. When the market closed on Tuesday, I knew it was the end of an intra-week contract, which is Monday-Tuesday contract. So let's go ahead and mark that on the chart. Here is the close of Tuesday. And here is the open of Monday. The next step is to mark Friday close, which happened to be the end of the second intra-week contract. From Monday Tuesday contract, we got this contract low, which is a liquidity. Let's mark that. Also, we got the high from Monday, which is our buy side intra-week contract liquidity. I marked that also. Now I have the intra-week contract liquidities, which are possible targets and can also cause reversal. I was able to take this sell trade right here, but this video is about the buy. In order to determine whether there is a buy opportunity at the run of the intra-week contract low, I had to look left to see the institution's activity in that zone. That took me back to December 8th to 13th. On these days, as you can see from the screenshot of my smart money data chart, the institutions left consecutive pending buy orders at the lows of the days, which means they intend to buy if price goes below those levels. With that, I already know that the buy setup is 50% certain after running the intra-week contract liquidity, which will take price below the low where institutional pending buy orders sit. Now that I have my bullish bias, the next step is to see if there is institutional price magnets the buy trade will target or that will pull price to itself. That brought me to Thursday, which is the day before the trade. We had two bullish price magnets on that day, which will pull price up in addition to the buy pending orders. In addition to the bullish price magnet, our VIP buyers also confirmed a bullish reversal on Thursday. At this point, our three smart money data are saying the same thing, which is buy. The next and final confirmation is to see if we have a buy setup in that zone with regards to price action analysis. Once I get a setup, I know the setup is more than 95% certain to win. As you can clearly see from Tuesday low, which doubles as the intra-week contract low, price created this ABCD swing to the upside to lure retail traders into an early buy trade. That low became my first liquidity zone. On Thursday, the low was taken out right here, after which a new ABCD swing was created, which makes this low my second liquidity zone. And like every Tom's Capital family members already know, this marks our consecutive liquidity run reversal model. If you are new to the channel and don't understand this, you need to watch our liquidity video and our ultimate reversal pattern video for better understanding of the reversal setup. If you haven't liked this video at this point, please like the video, at least to show me that I'm not wasting my time and energy trying to teach you guys. Take a second to do that right now. Click the like button. If you are yet to subscribe to the channel, do it right now. Click the subscribe button and turn on post notifications so you don't miss out on any of our videos. Back to the consecutive liquidity run reversal setup. At the run of the second liquidity zone is where I am to take my trade, as that marks the completion of the reversal model. The next step is to mark the next minor EBITDA prices below the second liquidity zone to mark my entry level and my stop loss level. Let's go ahead and do that. The low of the second liquidity zone is 1.0515. So the next minor EBITDA price below that is 1.0500. Let's go ahead and mark that. 1.0500. That is our entry EBITDA price. The next EBITDA level below that is 1.0485, which will serve as our stop loss EBITDA level. I use 5 pips below the stop loss EBITDA level as my stop loss when entering with limit order. That means this area between the two EBITDA prices is my trade zone, where I was supposed to enter my trade using pending order on the EBITDA price. That's if I'm not waiting for lower time frame reversal pattern. On that day, I did not do that because it was NFP and unemployment rate day. I knew the market will wait for the data release time before making its move. So I decided to wait for lower time frame reversal pattern around NFP data release time to avoid unnecessary stop-ons. Right now, let's take a look at the economic calendar for the 6th of January 2023 to analyze the data for the directional bias based on fundamentals. This will help you to understand why my buy trade was against the economic data released. Here is the economic calendar for the day from myfsbook.com. As you can see, on the day, we had 4 major data released which we take seriously at Tom's Capital. We had inflation rate and CPI for Euro and NFP and unemployment rate for US dollar. Inflation rate and CPI is almost the same thing, and they both came out lower than expected, which is bearish for Euro, that is sell for Euro. We also know that Euro USD is a pair and it's moved by both Euro and US dollar. So let's check the data for USD. NFP came out positive, greater than expected, which is bullish for the US dollar. Similarly, unemployment rate dropped and also came out lower than expected, which is also bullish for the dollar. Now we have bearish Euro and bullish dollar. This data is the optimal sell signal for Euro USD pair, as Euro is expected to lose value and US dollar is expected to gain value, which means double momentum bearishness for Euro USD as a pair. This is a direct opposite to the buy setup I had, backed by smart money data, that is pending buy orders and bullish price magnet. I followed the smart money data as against the economic data. I did this not because I don't value economic data, but because I understand that economic data's effect on the market is long term and not for intraday moves. Let's go back to the chart to complete the breakdown by showing you how I was able to enter the trade using lower time frame reversal pattern. After price entered into my trade zone and it's getting closer to the NFP data release period, I switched to the 15 minutes time frame from the H1 time frame. This is the 15-minute chart. On the open of this candle right here is when the NFP data was released. At that point, there was no reversal pattern yet. So I waited until the data came out and I saw it's bearish for Euro US dollar, which means retail traders using economic data for intraday trading or intra-week trades will be selling at that point. That further boosted my confidence level in the trade to 100%. All that is left is the reversal pattern. And as you can see, I got the normal reversal pattern with this bullish push that broke structure right here. After the break of structure is when I placed my pending order. If you have seen our ultimate reversal pattern video, then you know that the demand zone that led to the break of structure is where I'm to enter my trade. In this case, the demand zone is right here. And like I always advise you to add 1 or 2 pips when placing pending orders for clearance so you don't miss the trade by few pips. That's exactly what I did here. I added 2 pips above the demand zone and that's where I entered my trade, and my stop loss was few pips below this low. My first target was the minor EBITDA price closest to the price magnet pulling price, that is 1.0600 level. My second target was the intra-week contract high right here, and my final target was the next major EBITDA price, which is right here at 1.0850. All the targets were reached without any stress whatsoever. In fact, I got a few setups in between the trade in the same direction based on smart money data, contract period analysis, and price action. Let's add the risk reward tool to the trade to see what the risk reward ratio was for each of the 3 positions. All the trade had the same entry and the same stop loss level. The first position's take profit was at the EBITDA price closest to the price magnet. The second take profit was at the intra-week contract high. And the final take profit was at the next major EBITDA price, right here. So that means the first position gave me 1 to 3.8 risk reward ratio. The second position gave me 1 to 8 risk reward ratio. And the last position gave me 1 to 13.7 risk reward ratio. After the first take profit was hit, I moved my stop loss to break even and left the other positions to run. I was confident in holding the positions because the institutional data coming out daily kept showing bullish active order and bullish pending orders. With a good price action knowledge coupled with our smart money data, your trading will witness miraculous flip from struggle to success. I'm happy some of you are recording success already. I want to see more. I want to have 1,000 active and successful traders in my Tom's Capital group. That's my mission for this YouTube channel. Once I get that, I'm fulfilled. This is going to be the end of the video. Don't forget to like the video, subscribe to the channel if you haven't. If you have any questions or comments, leave it in the comment section or message me directly on Instagram at Tom's Capital. I'll see you guys on the next one. Have a good day and happy trading.